Good morning. The Texas CHIPS Act, semiconductor growth, and CRE demand. Now, if you want to understand where the next wave of commercial real estate demand is coming from, follow the chips, not the chips and salsa, the semiconductors. Between the Federal CHIPS and Science Act and the Texas CHIPS Act, say that three times fast, the state is positioning itself as Silicon Texas, competing directly with Arizona, New York, and Ohio for advanced manufacturing plants, R&D labs, and high-wage tech jobs. So for commercial real estate investors and business owners, this isn't just a policy headline. It's a 20-year demand story across industrial, office, retail, and housing. So what is the Texas CHIPS Act? You may be wondering. The Texas CHIPS Act is the state level companion to the federal CHIPS and Science Act, and together they provide resources. They provide billions in incentives for semiconductor manufacturing, R&D, and supply chain investments. There are grants, tax credits, and infrastructure support to companies that build or expand in Texas. It prioritizes workforce training through universities and community colleges to support long term industry growth. In plain English, Texas is paying serious money to become a top tier semiconductor hub, and global chip makers are listening. So, where the growth is happening? Well, you've probably heard of some of the several high profile projects already reshaping the map. First being Samsung's massive fab expansion near Taylor in the Austin metro. Texas Instruments multi-billion dollar fabs in Sherman and Richardson, so think Dallas Fort Worth. An ongoing interest from suppliers, packaging facilities, logistics operators, and specialty manufacturers that want to be within a truck ride of the fabs. These mega projects don't stand alone, and each fab pulls in dozens, sometimes hundreds of vendors, ranging from clean room contractors and equipment vendors to trucking, warehousing, and corporate services. And that's where the CRE opportunity sits. So, how semiconductor growth is driving CRE demand? Well, semiconductor facilities are like economic engines. Once they land, they trigger demand in multiple property types. So, first being obviously industrial and logistics. So, supplier warehouses and light manufacturing for components, equipment, and materials. As well, there may be a need for industrial outdoor storage or IOS for staging, laydown yards, and construction logistics. There's also temperature controlled or specialized space for sensitive equipment. And investors who owner build, modern tilt wall industrial, iOS, and flex space within 30 to 60 minutes of major fabs are seeing increasing inquiries, rising rents, as well as longer term leases. Two is office R&D. Semiconductor ecosystems need engineers, researchers, and corporate teams to support them. And that translates into R&D labs, testing facilities, design centers, and Class A and B office space. So submarkets near major universities like UT Austin, Texas A&M, UT Dallas stand to benefit from public-private partnerships and tech spinoffs. Now, for owner of older office assets, there's also an adaptive reuse angle, repositioning or converting buildings into lab, flex, or tech-friendly collaborative space. As well, you would have retail and hospitality services. So high wage jobs bringing spending power means new restaurants, fitness centers, medical clinics, and service retail around the fab corridors. As well, people will come, so you'll need hotels and extended stay lodging for visitors, engineers, contractors, as well as vendors. Neighborhood retail and new master plan communities built to house the workforce. So, investors who understand the day to day needs of tech workers can underwrite strong neighborhood, retail, and service oriented centers. Number four is housing and build to rent, or BTR. So, every 1,000 to 2,000 high wage jobs created by a semiconductor plant can translate into thousands of new residents in the region. And that drives multifamily development and value add plays near job centers. Build to rent communities as a bridge for relocating the talent who aren't ready to buy quite yet. Demand for single family rentals in good school district. Now, while your focus may be commercial, understanding the housing pressure helps you pick the right retail and service locations. Now, why this matters for Texas CRE investors. Well, here's why you shouldn't sleep on the Texas CHIP Act. And it should be on your radar if you own, develop, or finance commercial real estate. So think long duration tenants, semiconductor fabs, and suppliers are CapEx intensive and sticky. So once they build, they aren't moving in 5 years. And that supports long term leases and stable occupancy. There's higher quality credit. Many tenants are investment grade or strong middle market borrowers, which can improve your financing terms, cap rate on exit, and overall portfolio quality. The public-private investment flywheel. So as the state and cities add roads, utilities, and workforce training, it reduces your risk as a private investor. You're not building in the middle of nowhere anymore. You're riding a planned growth corridor. Cap rate compression in strategic submarkets. So as demand builds and rent growth stabilizes, expect cap rate compression in well-located industrial, flex, and mixed-use assets tied to semiconductor clusters. So here are some key strategies in the Silicon, Texas era. We'll have Dallas Street, Wall Street in Dallas. If you're an investor, developer, or business owner, here are ways to position yourself. So number one, map the semiconductor supply chain. Don't just look at the headlines. Identify some sub-layer information like equipment providers, material suppliers, logistics and trucking firms, specialized construction and engineering groups. These companies often prefer smaller, well-located industrial and flex spaces instead of mega campus type facilities. Number two is target tier 2 and tier 3 markets. So not every opportunity is going to be in Austin or a Dallas proper. And many suppliers choose more affordable land and leases in peripheral industrial parks along major highways. Smaller cities with pro-business attitudes and lower tax burdens is another draw. And also suburbs that offer quality schools and lower housing costs for their employees. Now, investors who get in early on land or IOS or modest industrial can see significant rent growth and appreciation as the ecosystem builds out. Number three is think infrastructure and power. So semiconductor and advanced manufacturing facilities live or die by reliable power and water sources. They need transmission capacity and grid resilience. And they need high capacity data connectivity. So sites near substations or major transmission lines, as well as water infrastructure, have an edge. When you underwrite, don't just look at the traffic counts, but also look at the power utilities and entitlement timelines. Number four is align financing with the opportunity. So with CRE credit markets loosening, investors compare the Texas CHIPS tailwind with smarter financing. And you can capitalize through fixed rate permanent loans on stabilized industrial and flex assets, or bridge or construction financing for spec industrial or value add projects. And there's also SBA 504 and 7A owner user loans for local businesses serving the semiconductor ecosystem. Not to mention DSCR loans for investors buying or recapitalizing smaller industrial and mixed use properties. And this is where a broker team that understands both real estate and capital markets earns their keep. Please keep me in mind. What this means for business owners. So if you're a manufacturer, contractor, or service provider, now is the time to lock in strategic locations near current or planned semiconductor corridors. And consider own your own building strategies using SBA 504, 7A, or conventional owner-occupied loans. And think about your expansion flexibility. Can you properly support additional square footage, outdoor storage, or future power upgrades? It's another reason to look at buying land and building on your own. Locking in the right real estate today could be major competitive advantage as the ecosystem fills in. Now, here is how the EXP Commercial Viking Enterprise team can help you in this regard. So, our team focuses on Houston, Katy, Fulshire, Brookshire, and Greater Texas, helping investors source industrial, flex, and mixed use properties positioned to benefit from semiconductor growth. Developers underwrite land and build to suit projects aligned with infrastructure and workforce trends. And business owners looking to secure the right space and financing so they can grow alongside this new Silicon Texas wave. Now, if you want to explore how the Texas CHIPS Act and semiconductor expansion might impact your portfolio or your next project, let's talk some more. You can call, DM, or email us to walk through opportunities in your target submarket. That, my friends, is it for the day. Hope you had a good week. We'll see you on Monday.